Hello. Today's episode is going to build on everything that we've been discussing in this series thus far on Donald Trump. When Trump has been pursuing policies during his second term, if we view them individually, they can seem quite erratic. But when we bring all these policies together in discussing a potential Mar-A-Lago Accord, we can see that some of his decisions have actually been chosen with a lot more clarity. However, for as much sense as some of his pursuits make, there are already some ways that Trump's plan has been derailed. Did those involved in prior research for Trump's grand plan for trade and economics plan on the value of the dollar decreasing? Did they plan that Trump would implement 245% tariffs on China as well? So today I'm going to dive into what Trump's overall plan is. I'll then explore, more importantly, if this plan is working and what the long-term implications of such a plan would be. Before exploring the potential impacts, let's break down the ideas behind Trump's pursuit of change in both economic and trade spheres. If we flash back to November 2024, Stephen Miran, formerly of Hudson Bay Capital, published a paper called A User's Guide to Restructuring the Global Trading System. He now serves as Trump's chairman of the Council of Economic Advisors, and this paper likely played a role in him getting his job within the Trump administration. Now that he has Trump's ear, what is he going to be whispering into it? To determine this, we're going to look into Stephen Miran's paper in more detail. So Miran opens by referring to Trump as a man in pursuit of a fair global trading system, and that Trump has held these beliefs for many decades. Back in the 1980s, Trump proposed tariffs and repayments towards defence from other countries as potential political policies, and he has stuck to his guns, pursuing both of these during his second term. One question that emerges here is, when Miran refers to Trump as being in pursuit of a fair global trading system, it's questionable as to whether Miran means a system that is fair for the United States or a system that is fair for everybody else. As I dive into more details on this topic, it will become clear that Miran does believe that in some ways the United States is also a victim of the current global trading system. Miran then states the reason for this unfair global trading system. He believes it is an effect of the dollar and its persistent overvaluation. It is true that during times of panic or crisis, investors flood into the dollar, which is seen as a safe haven. This boosts its value versus other currencies in our floating rate currency system that operates on supply and demand. In a concept that I've been referring to over the last few weeks, the demand for dollars during these situations is inelastic. This means that when prices change, consumers' habits remain the same. But since the dollar is a global reserve currency, it is expected that when times of crisis emerge, the dollar is flooded into as a safe haven. And this will continue to occur unless the world of global trade becomes more open to closing trade in other currencies. Staying on the same topic, China has also been in pursuit of a more fair global trading system for many years. We've seen this unfold in the last few years with many BRICS nations and Middle Eastern countries signing up for this Chinese system as these countries have started trading in their own currencies. When they undertake trade in their domestic currencies, they then would possess the currency of another nation. if they don't plan on using this currency to trade with said nation, then they can take this currency to the Shanghai Gold Exchange and they can exchange it for gold. This has been occurring rather quietly in the background for many years, and it hasn't become a mainstream narrative yet. But it also doesn't occur too often, based on the fact that, for example, say the UAE possesses reserves of Indian rupee. Unless they swap it for gold, they would have to trade with India to get rid of this. This is one reason why the world has a global reserve currency, because it avoids this issue. As I've also discussed in recent episodes, this rising potential global financial system run by the Chinese has been one such tailwind that has seen the price of gold skyrocket in the last few years. Although this Chinese-led system has been quietly occurring in the background for many years, Trump's pursuit of reform in global trade since he re-entered the Oval Office in January has seen this issue rise into the mainstream. We've seen tariffs implemented as a negotiating tool, which Miran discusses in detail in his paper, especially in the context of the US tax system. Miran also explores currency policy to correct the undervalued nature of other currencies around the world. And Miran also explores the financial market implications of the potential policy decisions that he includes in the paper. However, this inspiration for change that Trump is in pursuit of doesn't come from Stephen Miran alone. This is where we can start discussing the potential for a Mar-A-Lago Accord. Back in June 2024, former Credit Suisse strategist Zoltan Pozsar coined the phrase the Mar-A-Lago Accord. The idea was that the United States could pursue other nations accepting a weaker dollar and lower interest rates on their treasury investments. In return for such a deal, any country that accepted would come under the protection of the US security umbrella. Domestically in the United States, Trump believes that it is a strong dollar that has led to negative impacts on US manufacturing. Since local manufacturing is uncompetitive to other nations, the United States has imported more. This naturally leaves them dependent upon other nations and increases the trade deficit. I've discussed the impact of Trump's Liberation Day tariffs if they do return, but the equation essentially was formulated to eliminate the trade deficit with every nation. This is one of the main reasons why the equation was formulated in such a way. Interestingly, this is also the reason why the Liberation Day tariffs won't return in their current form, because this would completely upend global trade, which isn't what Trump wants to do. The deficits and debts within the United States are further exemplified in the military industry by the US's role as global policeman. So the aim here with such a Mar-A-Lago Accord is that a cheaper dollar would incentivise exports, disincentivise imports, would rekindle domestic manufacturing, and would lead to favourable deals with other nations that will lead to payment for inclusion within the US security umbrella. On the manufacturing issue, do note that in previous tariff occurrences throughout history, providing a boost to manufacturing via tariffs has been seen in some sectors, but it's never been tested on such a scale as what we're seeing currently. And if we zoom out and look at the long-term historical trends within manufacturing, we can see that manufacturing industries continue to decline regardless of any tariff event in history. Tariffs might have short-term impacts, but long-term change isn't particularly seen via tariffs. Although tariffs could also bring in additional revenue and lead to negotiations between the United States and other countries, there still exists risks to the United States, especially in these interconnected industries such as semiconductors. With over 600 companies around the world necessary to get from start to finish in the semiconductor supply chain, tariffs here risk hurting the United States more than helping it. However, it's not only the United States here that is risking potential growing pains in a new global financial system. Any nation that doesn't agree to such changes being proposed by the United States risks being left out in the cold. And so, although these changes will dramatically affect the rest of the world, as the United States wishes to share the burden of trade and security that in the past it took on alone, we do have to remember what all this is for. From Trump's point of view, all of this is in pursuit of an America First policy. Now, I'd like us to undertake some potential scenario analysis here. I'd like you to consider the worst case scenario possible if I gave you the phrase global collapse. Now, this could be economic, it could be societal or environmental in nature, but the most important thing is that it has occurred. In your opinion, could the globalized system of trade and finance be relied on in such a situation? In my opinion, it couldn't. For many years, I've been discussing how nations need to be self-sufficient in their necessities, because nations will always act in their self-interest. In such a worst-case scenario of global collapse, nations would almost certainly act in self-interest. Let's consider rare earth elements, for example. In this scenario of global collapse, the United States isn't self-sufficient in rare earths, and as a result, it's found its industries faltering due to a lack of access. In this scenario, would we see China send them rare earth elements? No, we wouldn't, and also they wouldn't have to. They are self-sufficient in rare earth elements, and they can do what they please with their supply. If the shoe was on the other foot and the United States was self-sufficient in rare earth elements, the same would apply. But just because this could occur as a potential scenario, an unlikely scenario, but it's one to consider for this example, this doesn't mean that nations should lay down and just accept this. Every nation around the world should be in pursuit of self-sufficiency in industries that are vital to the survival of a nation, or that will help in determining who the global superpowers of our future world will be. As Miran writes in his paper, the end of history and the peace dividend are over, and we now have the return of national security threats. As our world grows more complex and advanced, these threats grow along with the world. Any bad actor who wants to utilise such threats are currently finding it a lot easier to do so. In this more dangerous world, Trump wants other countries to pay to be under the United States security umbrella, while also pursuing US self-sufficiency. What would happen if a country rejected such deals and decided to go off by itself? Unfortunately, for most of the rest of the world, the United States has multiple tools that it can use to influence other nations, regardless of whether they are friend or foe. This is especially true as it currently seems that Trump is treating nations like foes unless they give him a big reason not to do so. Trump is worried that even allies of the United States currently have China as their biggest trade partner, and Chinese market share over many key markets is incredibly worrying. Trump wants countries around the world to buy US goods, but a relocation and reshoring of manufacturing will have to occur for this to happen. The status of the dollar is complicated in this situation, based on the fact that it is global reserve currency. Higher currency leads to more expensive exports, and imports rise to an equilibrium. As we know, there is demand for dollars and US Treasuries outside of trade. But in recent years, demand for Treasuries has been falling. Some nations have even begun to offload them. This is a key issue for Trump because it puts the United States at risk of having to buy its own debt. And at the same time, interest payments are elevated due to higher interest rates. The United States has to export US Treasuries to uphold global trade and global growth. Eventually, if this was to persist, Triffin's dilemma would occur. This marks the point where deficits are so large and debt accumulates to such a large amount that interest rate payments spiral out of control. Typically, this is an indicator of a collapsing empire, and the tipping point into Triffin's dilemma is often a large nail in the coffin of many empires. This issue has brought the rising debt in the United States to the forefront of the economic conversation. The issue of rising debts has been a talking point for decades in the United States, but nobody has made the difficult decisions that are required to address it. Is this what Trump is trying to do now? And if he is, how does he intend to do it? The consequences of the global financial system and the dollar as reserve currency is that, as I alluded to earlier, the United States can weaponize the system if it deems it necessary. We saw this when the United States confiscated Russian foreign exchange reserves that were held in dollars in 2022. Trump has stated that he will punish nations that seek to move away from the dollar, such as the BRICS nations. So it seems that Trump still wants the dollar to be as important in the global financial system, but he wants the burden of the dollar as global reserve currency to be shared among other nations. In return for this, he will offer security, and the global trading system will be redrawn in a fairer way. If we take a trip back to 1985, the Plaza Accords were a policy that saw the United States, France, Germany, Japan, and the United Kingdom coordinate together to weaken the dollar. However, if we look at the world today, the Chinese renminbi and the euro are two of the biggest currencies in the world outside of the dollar. The Chinese likely wouldn't agree to such a deal, and the European Union is currently taking a tough stance against Trump. Trump could threaten his tariffs, but if they didn't budge, an alternative idea is currently circulating. Scott Bessent, who is Trump's new head of the Treasury, has referred to this potential solution as leveraging the assets of the United States. The plan is to introduce low-yielding bonds that would last a century, that countries would be encouraged to swap to from their current Treasury holdings. A country could also have the option of swapping Treasuries for more physical investment in the United States, or it could offer to pay tariffs or come up with an alternative trade deal. But the most important thing here is that if a country didn't agree, the tariffs would arrive. If tariffs didn't work, a country wouldn't get to be a part of the US security umbrella. For some countries, the economic and security threats could ensure that they have no choice but to deal with Trump, whether they like it or not. Trump recognises that he has cards, and he's certainly trying to play them. Now, this is all very complicated, but the most important question is whether this strategy will work or not. We can't predict the future, but we can assess whether these policies are working right now. This is what I'll explore in next episode. But do keep in mind, when leverage is built on fear, this leverage can't last forever. I've been Dylan. I'll talk to you next time.